Hey everyone, welcome back to Corporate Decoder. Today we're diving into Fulton Financial Corporation's latest quarterly report. This filing has more twist than a pretzel, but don't worry, we'll untangle it together. Ready to see how Fulton Financial is handling rising interest rates, acquisitions and more? Let's get started. But before we do, if you're looking to make sense of the financial world, subscribe and join our Discord community, link in the description. First, let's get our bearings by looking at the table of contents. We see all the usual suspects: financial statements, management's analysis, legal stuff, and of course, exhibits. Now, before we get lost in alphabet soup, let's peek at the glossary. ACL means allowance for credit losses, and corporation means Fulton Financial Corporation itself. Always good to have a decoder ring for these reports. Alright, let's get down to brass tacks. Looking at the consolidated balance sheets as of March 31, 2025, Fulton Financial had total assets of about $32.1 billion. That's up slightly from the end of last year where they were at $32.7 billion. Digging deeper, we see that their net loans clocked in at $23.88 UI. It is important to note here that that is after subtracting out $379.7 million for potential loan losses. So are things looking solid for them? Maybe, but let's keep digging. Jumping down to the liabilities and equity section, it's worth noting that they have $192.9 million $2 stock. This is a different type of stock than common stock and impacts how much profit is left over for common shareholders. And then there's the shareholders' equity section. The total for that rings in at about $3.3 billion. Now for the juicy stuff. Let's look at the consolidated statements of income. For the 3 months ended March 31, 2025, their total interest income was almost $400 million. Of course, they had to pay out a good chunk of that in interest expense, about $148.5 million. But after all that, the net interest income came in at around $251. We see that net income available to common shareholders comes out to about 50 cents per share. That is up 14 cents from the 36 cents per share a year earlier. They also declared cash dividends of 18 cents per share. Okay, let's move on to the consolidated statements of comprehensive income. Net income is solid at $93 million. After factoring in other things like unrealized gains or losses on some investment securities, the total comprehensive income shakes out to almost $109.3 million. Next, the consolidated statements of shareholders' equity gives us insight into the ownership structure and changes in the company. Looking at this for the 3 months ended March 31, 2024, was 3,197,324, was 3,125 our balance at December 31, and welcome back to the channel Finio. We kender til Finierfinen 35. Seeing as the balance at March 31, 2025 was $3,274,321, we can see that they ended up with $3,274,321. Overall, there's a healthy change in total equity, primarily from net income. Lastly, we have a look at the consolidated statements of cash flows. We can see the net cash used in investing activities was actually a negative number, as it used cash instead of brought it in, coming in at approximately negative $74.3 million. On the other hand, net cash provided by financing activities was approximately $40.2 million. At the end of the day, cash and cash equivalents at end of period was almost $1.3 billion. Enough of the big picture. Let's see some notes. First, we see the acquisition of substantially all of the assets and assumption of substantially all of the deposits and certain liabilities of Republic First Bank. The bank acquired approximately $4.8 billion assets of Republic First Bank. The bank also assumed around $5.6 billion of the liabilities of Republic First Bank. All in all, the financial settlement process between the bank and the FDIC concluded on April 25, 2025, with no additional adjustments required to the preliminary gain on acquisition net of income taxes. That is to say, the original accounting of the deal was pretty accurate. Now this is interesting, the excess of the estimated fair value of net assets acquired and the cash consideration received from the FDIC over the estimated fair value of liabilities assumed was recorded as a preliminary gain on acquisition of $37.0 million net of income taxes. Here's an interesting find. Let's see which investments lost value over time. We can see that looking at the available for sale investments, almost every class of assets have lost value. It will be important to keep an eye on that metric going forward. Let's look at the loans themselves. Met loans clocks in at over $23, $80 billion. But we need to keep in mind there is an allowance for credit losses. This allowance is a safety net for when borrowers can't pay back their loans. Here we see a chart which shows that there was about $12.6 million in loans that were charged off or deemed uncollectible. They tried to make up for this by making a 13 bond abolition for credit losses. I guess they really want to be sure they have a cushion in case things go south. Preferred stock also showed to be a valuable asset for the organization with $92,878. We can see the distribution of those shares and amounts on the 3 months ended March 31, 2025 chart. Now, a word of warning. The company wants us to remember that forward-looking statements are not a guarantee of future performance. There are a lot of risks that could affect their future. Here are just a few examples: changes in interest rates, events in the financial services industry, and even geopolitical conditions. There are so many things that could impact future results and should be considered when investing. The CEO and CFO have given the green light. They say that the company's disclosure controls and procedures are effective. This means they believe the company has good systems in place to ensure everything is reported accurately and on time. As for any big legal battles, let's scroll on down. Looks like they are involved in some pending and threatened claims and other legal proceedings in the ordinary course of its business activities. That being said, any liabilities from this stuff, either individually or as a whole, shouldn't have a major bad effect on the corporation's financial state. Finally, let's talk about how they are handling their funds. The company is committed to its 2025 repurchase program, and all the details are right here. They can also give out different kinds of stock awards to employees and board members. They filed all the agreements right here. Okay, let's sum up what we've learned. Fulton Financial seems to be navigating a complex financial environment, and the Republic First Bank acquisition could potentially have positive effects. Non-performing loan rates are decreasing, and there is no expected long-term adverse effects for regulatory and legal proceedings. But there are also some red flags to keep an eye on. Their forward statements have very little information and only serve to warn that anything could happen to their portfolio. They seem to be taking steps to offset a potentially bad economic outlook. But only time will tell if these steps can succeed. What do you think about Fulton Financial's moves? Is this a stock to keep an eye on or one to avoid? Drop your thoughts in the comments, and if this analysis was valuable, remember to give us a thumbs up and subscribe for more. Finally, don't forget to check out the Discord link in the description to chat with other investors. Thanks for watching, and I'll see you next time.